So I will just answer. So when you want to finance your MBA or MIM or your masters or anything else, these are possible options that are there. So definitely your private funds, which you're getting like probably savings, your savings, if you have probably worked for 2 years, or it can be your family savings that you're getting. These are personal funds, private funds that you're getting. Okay. The other way to probably finance your MIM will be through internships. Internships are possible. See, for example, I showed you HEC Paris. There is one gap year you can take, and you can go and work in some company and then come back. So you can obviously like fund yourself, right, through the internships. Third thing is assistantships. So you can be either a teaching assistant or a research assistant or even like a student housing assistant, depending on various different things, or basically a graduate assistant. This is very limited for MIM because some of the MIM programs are very, very short, and even like the other ones are very competitive. Okay, you may not have enough time to like do an assistantship. And then some people also take up on-campus work in order to like support themselves for the uh, like the living expenses. See, for example, people work in libraries, people work in university cafes, whatever is like the options for the university, they work, and then they work as graders and so on. So that is possible, but again, MIM is a very fast-paced program, so you may not have enough time for like taking up on-campus work and assistantships and all that. Okay, but mainly these are some self-finance modes. Then comes the loans. Loans are obviously like what you guys are all thinking. Everyone wants to get a loan. Now, loans comes from different sources. So it can come from banks, which you all know, like an SBI or a Canada Bank or a ICICI or an HDFC, Axis, all of these banks. So it can be like a private bank or a public sector bank, any of those. The regular traditional banks are definitely means for getting education loans. And then you also have what we call as a non-banking finance corporations. So I'll show you a couple of them today, which are also means of getting money, basically. Then you have the college-specific loan providers, meaning that the college, say for example, HEC Paris, will tie up with a bank and then give you a loan at a lower cost. Okay. Then you have the college funds itself. See, the college will have like trust funds. Like for example, Kellogg has its own trust fund from which it gives money to it lends money to its students at a lower interest rate. See, I'll tell you, like, see, what is the purpose of loan? Say for example, I want to take a loan of 100 rupees. Now, when I'm getting a loan of 100 rupees, what do I want to know at the end of the day? Let's see, how much are you going to charge me for giving me this 100 rupees? So I want that interest rate to be the lowest as possible. Okay. And then I also want you to give me the time, the lender to give me the time, like maximum time in which I can repay the loan. So for 100 rupees, see, if there is a guy who's giving 4% on 100 rupees and then saying that pay me within 2 weeks, okay, versus somebody else who's giving me like a loan at 100 rupees, at they're giving it the loan at 10%, okay, but they say that you can pay it at probably after say 2 years, okay. So in that case, what happens? Depending on how soon can I pay and my ability to pay, I will probably take the second option. If, for example, or the first option, depending on it. If I'm able to pay very quickly, then I will take the 4% and 2 weeks. If I'm not able to pay like more, then I'll take the 10% and the 2 years. Okay, that's what I'm saying. So loans are very simple. Like, what is the interest rate? What is the processing fee? And then like what is the tenure? When does it start? Like when do they start doing your interest? And then of course, like how much option are they giving? Options in terms of payment, repayment options, like that they're giving you, and so on. So for example, some of the loans, they say that initial years you pay me less, later on you pay me more. Other loans say that initial years you pay me more, later on you pay less. Depends on different loans and other things. So that is there. And then of course the golden thing that we want, scholarship. Okay, there are so many school specific scholarships which are available for this particular program, which are targeted. See, for example, they'll say that this scholarship is applicable only for women. Okay, other can be like this scholarship is applicable only for Hispanic or Latinos. Okay, so there can be very specific scholarships targeting a certain minority or a certain target audience. Okay, so they'll say that I'm going to give a like, so this particular scholarship is like only Indians can apply. and so on and so forth. So this is what we call as a college specific. This one, obviously, they're all merit based. Okay, and then of course we also have the need based scholarships, which are very very rare. It is not like commonly given, but it's definitely available as well. Okay, and then of course we have the independent scholarships that are also available from external agencies. Example would be JN Tata Endowment Fund. Typically gives people money at a lower interest rate so that they can go and then go for it. All right. So whether it is an MBA or an MIM or a specialized business masters, these are options for you to fund it.